Proposition 33. Auto insurance companies. Prices based on driver's history of insurance coverage. Initiative statute. Plain language, allow auto insurers to offer higher or lower prices based on a driver's history of insurance coverage. This is going to be the simplest proposition to get through. It's pretty straightforward. You may or may not know this, but the auto insurance industry is heavily regulated by the state of California. They can't just do whatever they want or set their prices however they want like Disneyland. It's very obvious that the government does not regulate Disneyland's pricing. So if an insurance company wants to change major operating principles, particularly principles that affect how they charge their customers for insurance, many times it requires a public vote, like Proposition 33. What does it do? Prop 33 makes it legal for insurance companies to set prices based on whether a driver has previously had insurance. Specifically, this would make it legal for insurance companies to offer discounts to drivers who have been insured continuously in the past and charge higher prices for drivers who have not maintained continuous coverage. However, this law stipulates that a driver cannot be charged more if the driver had been uninsured for less than 90 days or if the driver was uninsured due to military service or unemployment. Also, children would be allowed to piggyback on their parents' insurance history. Long story short, right now an insurance company can offer you a loyalty discount for maintaining coverage with them, but they can't offer you a discount for maintaining coverage with another company. This law would allow insurance companies to charge you less if you've been insured continuously in the past, or charge you more if you are applying for insurance after being uninsured for more than 90 days in the past. Again, you may not be charged higher prices if you are uninsured due to military service or unemployment. The yeses say, Prop 33 lets you shop around and get the best possible deal. Currently, insurers can't offer continuous insurance discounts to drivers coming from other companies. Now they can, making it easier for people to switch insurance companies and keep their continuous coverage discount, leading to more competition and lower rates. Prop 33 increases competition between insurance companies. California consumers deserve a reward for following the law and purchasing car insurance. Under Prop 33, you get a bigger discount for every full year you're insured. The longer you're insured, the greater the discount. This will encourage the uninsured to get insurance and make our roads safer. Prop 33 protects people who are active military. They can't be charged higher prices. People who are laid off or furloughed, you can keep your status as continually covered for up to 18 months during unemployment. And driving age children. Children can qualify for the discount based on their parents' coverage even if they're away at college. And again, it allows you to miss payments for 90 days for any reason and still remain eligible for the discount. And the no's? Working Californians have it hard enough these days. We shouldn't have to pay more for auto insurance because of another insurance company trick. Proposition 33 is funded 99% by one insurance company billionaire who says he wants to save drivers money on their auto insurance. When was the last time an insurance company executive spent $8 million on a ballot initiative to save you money? For the record, the billionaire they are referring to is Mercury Insurance Chairman George Joseph. They continue saying, Prop 33 punishes drivers with perfect driving records. This is another deceptive trick to raise auto insurance rates for millions of responsible drivers in California. Prop 33 punishes those who stop driving for legitimate reasons when they return to the insurance market, like people going to college, people recovering from a serious injury, people who temporarily stopped driving to take public transportation, people who take mass transit to work shouldn't pay more for their auto insurance when they start driving again. People who are unemployed shouldn't pay more for their insurance when they start driving again. And people who drop coverage because of serious illness shouldn't pay more for their auto insurance when they start driving again. California law currently prevents auto insurance companies from charging people more simply because they had not driven previously or were too poor to drive in the past. Prop 33 will allow insurance companies to start surcharging millions of Californians. The California Department of Insurance says that Mercury Insurance has a deserved reputation for abusing its customers and intentionally violating the law with arrogance and indifference. They say Prop 33 will result in dramatically higher rates and hurt California's middle-class families. In states where the Prop 33 surcharge is legal, the result is higher premiums. Texans can pay 61% more. Nevadans can pay 79% more. And Floridians can pay 103% more. According to the California Department of Insurance, Prop 33 discourages people from buying insurance, which may add to the number of uninsured motorists and ultimately drive up the cost of uninsured motorist coverage for every insured. More uninsured drivers hurts taxpayers and the state. Tell this insurance company billionaire it's not okay to deregulate auto insurance. To me, this is a no-brainer. I'm voting yes on this. It makes sense that insurance companies should be able to give you a discount for maintaining insurance coverage, and they should be able to charge you more if you haven't maintained continuous coverage. I believe this will make insurance companies more competitive, and I think it will be good for people who follow the law and stay insured. Now, let's look at the arguments for the folks opposing Prop 33. Working Californians have it hard enough these days. We shouldn't have to pay more for auto insurance because of another insurance company trip. Working Californians won't have to pay more for auto insurance if they maintain their coverage. Prop 33 is funded 99% by one insurance company billionaire. I don't care if someone is a billionaire. Does that automatically invalidate anything he supports? He's a billionaire? Prop 33 punishes drivers with perfect driving records. Perfect record? Of course you have a perfect record if you haven't been driving. You know what? I've never crashed an airplane. I have a perfect record. If you have a perfect record and you're driving and maintaining auto insurance coverage, there's no penalty. It punishes those who stop driving for legitimate reasons when they return to the insurance market. Look, insurance companies set premiums based on the amount of risk a driver poses. If you haven't been driving for whatever reason, you're rusty. Therefore, you're a higher risk than someone who has been driving continuously, and thus a higher rate makes sense. I understand. You broke your leg and you can't drive. It's sad. I get it. But just because something doesn't play in your favor doesn't mean it's wrong. Duh, your rates are going to be higher if you haven't been driving. It doesn't mean that you're a bad person or that you're less of a human. It just means you're at a higher risk of making a driving mistake. And you are. Less experience means more margin for error. California law prevents auto insurance companies from charging people more simply because they hadn't driven previously or were too poor to drive in the past. Prop 33 allows insurance companies to start surcharging millions of Californians. Again, if you haven't been driving for whatever reason, you're a higher risk. Higher risk, higher premiums. It's fair. This is another deceptive trick to raise auto insurance rates for millions of responsible drivers in California. Prop 33 does not do this. The only way your rate will go higher is if you are not responsible or not a driver. If you are responsible and you're driving, then you'll be saving money. The argument that piqued my interest for a little bit was that bit about Texans paying 61% more, Nevadans paying 79% more, and Floridians paying 103% more after passing similar measures. So I called the No on Prop 33 campaign and learned that these numbers are not for everyone, only for people who have not maintained continuous insurance coverage. Moreover, I called the Yes on Prop 33 campaign and they informed me that in 1988, California passed Prop 103, which prevents California insurance companies from charging exorbitant premiums for auto insurance. So that's a protection we have here in California. They try to say people who are unemployed shouldn't be penalized. They aren't. The unemployed have a 1.5-year grace period before this would affect them. Finally, the opponents of Prop 33 encourage us to tell the insurance company billionaire it's not okay to deregulate auto insurance. This is hardly deregulating auto insurance. This is a relatively small amendment to insurance law. A yes vote on Prop 33 means lower rates for people who've been consistently insured and higher rates for those who haven't, and a no vote keeps everything the way it is now. I see no reason to vote no on this. The Darryl Johnson Show says yes on Prop 33.